Bank of America has just made a bold move, expanding its services to offer cryptocurrency investments to its wealth management clients. This announcement is sending ripples through the financial world, as one of the most established names in banking steps into a space once considered too volatile and risky for traditional institutions. For years, big banks kept digital currencies at arm's length. Many financial giants were skeptical, citing concerns about regulation, security, and the unpredictable nature of crypto markets. Now, one of America's largest is stepping directly into the crypto arena. This is a significant departure from the cautious approach that has defined Wall Street's relationship with digital assets. This isn't a minor update, it's a calculated shift, driven by overwhelming client demand. Wealthy investors have been asking for more exposure to digital assets, and Bank of America is responding decisively. Qualified clients can now invest directly in major cryptocurrencies like Bitcoin and Ethereum, as well as in crypto-focused ETFs. This opens up new opportunities for portfolio diversification and growth. This gives traditional investors a familiar, regulated way to access the crypto market. No need to manage digital wallets or private keys. Everything is handled through the same trusted advisors and platforms they already use. By integrating crypto into their existing wealth management services, Bank of America is making it easier for clients to explore this new asset class without the technical hurdles that have kept many on the sidelines. The move signals a major shift. Digital assets are no longer just for tech enthusiasts, but are entering mainstream portfolios. This could encourage other banks to follow suit, accelerating crypto adoption across the industry. When a powerhouse like Bank of America embraces crypto, it adds legitimacy to the entire space. It sends a message that digital assets are here to stay, and that the financial world is evolving. This could mark the start of a new era for both traditional banking and digital finance. The lines between old and new money are beginning to blur, creating exciting possibilities for investors and institutions alike. We'll be watching closely as this story unfolds. The impact of Bank of America's decision will be felt across markets, and could influence how other major players approach digital assets in the future. The financial landscape is changing fast. As innovation accelerates, both investors and institutions will need to adapt to stay ahead in this rapidly evolving world. So, what are cryptocurrencies? You've probably heard the term everywhere, from news headlines to conversations with friends. But what does it really mean? And why is everyone talking about it? Simply put, cryptocurrencies are digital money, an online version of cash that exists only in electronic form. You can send, receive, and store them using your phone or computer, without ever touching a physical coin or bill. Unlike traditional dollars or euros, cryptocurrencies aren't issued or controlled by any government or central bank. There's no single authority in charge, which means no one can just print more or freeze your account. Instead, they run on a decentralized technology called blockchain, a public, unchangeable ledger that records every transaction. This system is open for anyone to inspect, making it transparent and nearly impossible to tamper with. Bitcoin, launched in 2009, was the first cryptocurrency and remains the most famous. It was created as an alternative to traditional money, aiming to give people more control over their finances. With Bitcoin, people could send secure peer-to-peer digital payments to anyone, anywhere in the world, without needing a bank or payment service in the middle. Ethereum soon followed, offering not just a currency called Ether, but also a platform for building decentralized apps, programs that run exactly as programmed, without downtime or interference. All cryptocurrencies are secured by advanced cryptography, which keeps transactions safe, private, and prevents double spending. This technology is what makes digital money possible and trustworthy. By relying on code instead of institutions, cryptocurrencies shift trust from banks and governments to technology itself. This is a radical change in how we think about money and who controls it. For some, crypto is an exciting new investment opportunity, with the potential for big gains. For others, it's a revolutionary technology that could reshape industries far beyond finance. Cryptocurrencies enable fast, borderless transactions, letting you send money across the globe in minutes. They challenge the way we think about value, ownership, and the future of payments. As major banks like Bank of America and other financial giants get involved, understanding crypto is becoming essential for everyone, not just tech enthusiasts or investors. The digital economy is here, and it's growing fast, changing the way we work, shop, and interact with money every day. The world of crypto is evolving rapidly. Are you ready to be a part of this digital revolution? Why are investors flocking to crypto? Three main reasons stand out. First, Bitcoin's fixed supply makes it attractive as a hedge against inflation, like digital gold. Second, crypto offers portfolio diversification. Its price often moves independently from stocks and bonds, helping balance risk. Third, the potential for high returns is hard to ignore. Crypto's volatility means big swings, both up and down. Some investors are betting on the underlying blockchain technology, seeing it as the next big revolution, much like the early days of the internet. For many, investing in crypto is a long-term play on innovation. The risks are real, but so is the potential. That's why even cautious investors are paying attention. Crypto is no longer just a speculative gamble. It's a serious part of the investment conversation. The future is being built now. Bank of America's journey into the world of cryptocurrency has been cautious but deliberate, reflecting the bank's long-standing reputation for measured decision-making. For years, the institution watched the crypto space from the sidelines, carefully weighing the risks and rewards before making any significant moves. Initially, the bank limited exposure to a select few, offering only Bitcoin futures, keeping a safe distance from direct crypto ownership. This approach allowed Bank of America to test the waters without fully committing, ensuring compliance with regulations and protecting its clients from the volatility that often defines the crypto market. But as client demand surged and the digital asset landscape matured, the bank realized it had to adapt or risk falling behind. The growing interest from both institutional and individual investors signaled a shift in the financial world that could not be ignored. Internal memos revealed mounting pressure from sophisticated investors seeking more direct access to digital assets. These clients were no longer satisfied with limited options. They wanted to participate in the growth of cryptocurrencies and diversify their portfolios. The bank's new policy is a leap forward. Now, a broader group of wealth management clients can invest directly in major cryptocurrencies and regulated ETFs. This move opens the door to new opportunities, allowing clients to tailor their investment strategies to the evolving financial landscape. This marks a shift from a defensive stance to a proactive embrace of opportunity. Bank of America is positioning itself as a forward-thinking institution, ready to meet the needs of a new generation of investors. By expanding access to crypto, Bank of America is acknowledging that digital assets are now a legitimate, if risky, part of modern investing. The bank is helping clients navigate this complex space with expert guidance and robust risk management. The old skepticism is giving way to innovation, as the bank invests in new technologies and develops strategies to stay ahead of the curve. The bank is evolving with the market and its clients, demonstrating a commitment to growth and adaptability in a rapidly changing world. This is a pivotal moment in its history, as Bank of America bridges its storied past with a bold digital future. The message is clear: adapt or be left behind. Bank of America is choosing to lead, not follow, in the era of digital finance. Bank of America isn't alone. This is part of a sweeping trend across major financial institutions. Wall Street giants like Morgan Stanley and Goldman Sachs have also expanded crypto offerings for their wealthy clients. As one bank moves, others follow, creating a competitive race to meet client demand for digital assets. What began as cautious experiments is now a mainstream shift. The integration of crypto into traditional banking is accelerating, adding legitimacy and stability to the market. The old Wall Street versus crypto narrative is fading. Now it's about convergence. Banks are finding ways to manage crypto's risks while seizing its opportunities. This collective movement is building the infrastructure for wider adoption. The financial world is changing, and fast. The bridges between old and new finance are being built right now. Despite the excitement, Bank of America is clear. Crypto investing isn't for everyone. The market is volatile. Prices can soar or crash in hours. That's why access is limited to sophisticated investors who meet strict wealth and experience criteria. Clients must undergo rigorous risk assessments and prove they understand the stakes. The bank's approach is about responsibility, protecting clients from risks they can't afford. Think of it like selling a race car. Only experienced drivers get the keys. Bank of America is acting as a careful gatekeeper, not a reckless promoter. The message: Proceed with caution, know the risks, and never invest more than you can lose. Crypto is high-octane finance. Only the prepared should enter. Why are big banks embracing crypto now? The answer: new regulatory clarity. For years, unclear rules kept banks on the sidelines, wary of legal and compliance risks. That changed in early 2024, when the SEC approved spot Bitcoin ETFs, regulated products that let investors access Bitcoin through familiar channels. This was a game changer, giving banks a safe, compliant way to meet client demand. Regulated ETFs brought legitimacy and structure to the market. With the green light from regulators, banks could finally move forward with confidence. This shift opened the floodgates for institutional adoption. Now banks can offer crypto exposure without the old uncertainties. The era of regulatory hesitation is over. Bank of America's announcement sent shockwaves through the crypto market. The news boosted investor confidence and triggered a short-term jump in Bitcoin and Ethereum prices. More importantly, it signaled that digital assets are maturing and gaining mainstream acceptance. Institutional involvement brings more capital, liquidity, and stability to the market. As big players enter, wild price swings may become less common. Each move by a major bank validates crypto as a permanent part of the financial system. This encourages other institutions to follow suit, accelerating adoption. The bridges between traditional and digital finance are now open for traffic. The future of money is being built today. Bank of America's move is more than a headline. It's a turning point in financial history. The gap between traditional finance and digital assets is closing fast. Clients want portfolios that reflect a digital world, and banks must adapt to stay relevant. This means not just offering crypto products, but building the expertise to guide clients safely. As more institutional money flows in, crypto could become a more stable, mature asset class. The blending of old and new finance will spark innovation and new financial products. Cryptocurrencies have evolved from fringe curiosity to a core asset class. The risks remain, but the direction is clear: integration, not competition. The future of finance is a synthesis of both worlds. How we invest, transact, and build wealth is changing forever.